That works for me. Yeah. I'm trying to think, is that the one that's right there off the square? Yeah, I've already went and chatted with them. Yeah. Yeah, I already went. So she's not doing that anymore. She's doing a different grant for them because I went and visited with them not too long.
Thank you for joining us today, and welcome to the library, and thank you to those watching on the live stream. Before we get started, please note the feedback forms at the back of the room. If you fill these out, it helps us develop more programs like this one, and this is part of a series, and we'd really like to extend it. We're excited to kick off our new monthly financial education series presented by Arvest Bank, with presentations covering practical information and tools to support your financial well-being. Today's presentation will focus on budgeting to help everyone get off to the right start with your New Year's financial resolutions. Today we are joined by Brandon Humphries, a regional branch manager with 18 years of banking experience, managing the downtown and crossover Arvest Bank locations, and Alejandro Calvillo, a small business banker who had been with the bank for 12 years and has worked in many capacities, including branch management and small business work. Please help me give them a warm welcome.
Hey guys, how's it going? So today, obviously, we're going to talk a little bit about budgeting. So just to kick it off, this workshop, we're going to talk to you about a few different things. We're going to explore the importance of creating and maintaining a budget. We're going to examine the differences between wants and needs, and setting goals for spending, savings, and debt repayment. In these slides, we're going to talk about Marta. She's going to be kind of our scenario person in the scenario to follow along with in the packets. Marta is a 40-year-old woman who works 2 jobs, one at a grocery store, another as a hostess at a restaurant. Marta often feels overwhelmed by her debt. She also pays bills late in the past. One reason is her personal finances are not very organized. Marta wants to become more financially stable. Marta makes about $2,000 per month in net income. Marta feels like she can't make her money last through the end of the month. How do you guys think Martha could help herself get ahead? What do you think she would need to do? And we got make a financial plan, make a budget, have savings, live within her means. Can anybody give me an example of which one would best suit her or help her in this kind of finance? What was that? Make a financial plan, yes.
They all sound like.
And that's right. They would all help her, right? Just doing any one of those things would help her kind of, at least build a better financial plan kind of going forward and budget money. And so all these are good examples of what Marta could do to kind of help get ahead with her budgeting. Oh, and sorry, I missed one, reducing her debt. Now, do you guys know the difference between gross and net income? Okay, so gross income is the amount of money that you earn prior to taxes being taken out. And then your net income is going to be the amount of money that you earn after your taxes are taken out. Budgeting is the process of creating a plan to spend your money. So how can a budget help me? It would help to live within your means, help you pay down your debt, and helps you save for the future and emergencies. So I'm sure everybody here has kind of had something within that they can kind of relate to happening in their lives. In the packets, this one here shows a list of wants and needs. So could you guys give me some examples of what would be a want in this list of categories here? Entertainment, yes, that's a good one. We all like to be entertained, right? Can anybody else give me an example? Travel, yes, fair enough. Everybody likes to vacation. Any others? Yes, fair enough, yes. You might want to do the hair.
And coffee is debatable on wants and needs, depending on who it is.
Yes.
And there's a lot of things, like car payment. You need a car, but you may not need a brand new Corvette. So part of it's deciding what level of a want or need it is.
Balancing out what you need. Yes, yes. Most definitely. I guess if you don't feel like cooking that night, then yes, the restaurant's going to be the one. But good, guys. Those were all good examples. This year, so again, in the packets, it's going to break down kind of what Martha currently uses and spends her money on. And so it's got a breakdown of, what she spends on coffee, restaurants, entertainment, clothing, salon. Which one of these expenses do you guys think that Martha could kind of work on to reduce?
She could get rid of this.
Fair enough. Yes. Yes. Or at least reduce the cost, right, of what she would be spending there. So fair enough. Yes. Any other examples of what she might be able to reduce there? Yes, that is what my wife started doing. Yes, yes, perfect. Those are all good examples of what she could do to reduce that. And again, how can I free up funds? Just cutting expenses. Everybody knows kind of what a real want is and what a need is and what you really need to have versus what you should probably cut back on or what you can cut back on. Reduce spending, same thing, is just finding maybe cheaper options of things that you're already paying for. Price shop for services, and then you got think about a new job, obviously pay raise, things like that, maybe finding something else that you may be good at that can help get you some of that. And consider freelance or gig works. And so in her case, she's already working 2 jobs, so it might be a little bit difficult, but maybe finding another job, right? And then I guess I'll turn that over to you here.
Now we're going to talk a little bit about debt and how to repay it. Okay, debt management strategies. There's a couple of different options that we're going to look at today. The avalanche method, which is where you list all your debts from highest to lowest, and then you ensure that your monthly payments are met on each one, but then you choose the highest interest rate to pay off first. So it's kind of like an avalanche. It just comes falling down from the highest down to the lowest. Snowball is where you're going to list all your debts from smallest to largest balance. Again, you always want to make sure that you're making at least your minimum payment. And then you're going to choose the loan with the smallest balance to pay it off first. A lot of people like to do that because it's kind of, you get that feeling of, hey, this one's done. I can cut this card up and I don't have to use it anymore. Okay, talk a little bit about setting financial goals. Financial goals are your personal goals that you're going to set for yourself about how you're going to use your money. We're going to have 3 different areas to look at: short-term goals, medium, and long-term. Short-term are where you could accomplish it in a few months or a couple of years. Anybody have what a good short-term goal would be? Pay off a credit card, perfect. Buy a new PlayStation. Medium, accomplished in 2 to 5 years. So what maybe falls in that? You could possibly save up for a house in that amount of time. A car is a good one. Even some of the wants, a vacation. If you want to save up to go on vacation, that'd be maybe a medium term. Long term is more than 5 years. Retirement, kids' college, getting that house paid off, those type of things. Now, in this book, we've got where you can actually, at the back of it, it's a whole budget section where you can write your goals and then keep up with a budgeting worksheet. That's going to be the very back part. Okay. When you're creating a budget, there's lots of different ways that people do that. You know, people do, you may have heard like the envelope method where you stick money in envelopes to pay bills, your you know, car payment, house, everything separated out by different categories. Today we're going to focus on how you would create a budget with the 50-30-20 rule. Has anybody heard of that before or know what that is? Okay. What it is, at least 20% of your income on savings or debt repayment. So you want at least 20% of everything you bring home to go towards that. No more than 30% of your income on your wants. Okay, and that's going to be adjusted depending on, you know, where everything else is. That should be the last one that you're going to set, but it's still important to make sure that you're setting it and having a little fun. And then no more than 50% of your income on your needs. Is that? Oh, it's where it's, yeah, sorry. Okay, so these are Martha's monthly expenses after she cut things down. Okay, one of the things, a lot of people, we didn't really talk about cutting needs, but she did cut $50 off of her grocery bill. Things like that are things that you can look at too. You don't just want to look at your wants when you're cutting down, because a lot of times your needs, you can actually save more by cutting down some of your needs. A good example of that is, you know, car insurance premiums. Those change all the time, and depending on what company you're with, you may find a new company that will take a little bit less out of your needed money to spend. You could also look at, you know, let's say you've got a car that's 10 years old and it's paid off. It's not worth a ton, but you still need to carry insurance on it. Maybe you're still carrying full coverage on it. Well, if you look, you know, where you've got, you know, a car that's worth $5,000 and you're paying, you know, $200 a month on insurance, maybe you just need liability on that car. So that would help out. Utilities, cell phone, that's another good one when you're talking about cable or internet. There's all those different companies out there that are vying for your business. So it doesn't hurt anything to change those up. I've changed between Cox and AT&T like 4 times because they'll do new promotions for new customers. So I'll go do this one for a couple of years, and then when that contract's up, I'll go over here and do this one. Strategies for savings. You want to make a habit out of savings. You want to decide on an amount each month and really do your best to stick to it. Get used to putting that money in savings. One thing I like to do is use automatic savings. My savings, when I get paid, part of my check immediately goes to savings. So I don't ever see it. So if you don't see it, it doesn't, you know, feel quite as bad when you're putting it back. And I know people that have put money in savings and even just forgot about it. And before you know it, you can have a ton saved up. Limit spending. You also want to make sure that you're limiting your spending and cutting back where you can, especially with the cost of goods and everything going up like they have recently. You really kind of want to take, you know, even week by week, month by month, take time to sit down and look at your budget that you make and decide, you know, where can I cut back and where can I get more to put in that savings? Because that's your ultimate goal. Everybody's ultimate goal is save money and retire to where you don't have to work anymore. Limiting spending is a great way to do that. Another thing that I do with the automatic savings is if I get a raise and I get, let's say I get a 5% raise, I'm going to immediately, before I even see what my new pay is going to be, I'm going to take 3% of that, 2% of that, and put it in my savings. So then you really are, it's like you're not losing anything. And if you do that every single year, you can really rack up a lot in your savings, whether it be your savings or even better, if your company offers 401k or retirement, a lot of times they'll match up to 4 or 5%. Some companies will. So you want to make sure that you're taking advantage of that as well. Okay. Just remember that there's lots of strategies for budgeting, but the most important thing is that you manage your spending, savings, and your debt repayment. When approaching your debt repayment, consider strategies like the avalanche or snowball method to help you. Out of those 2 methods, which one which guys do you guys feel like you would choose? Snowball or avalanche? Snowball. So you can get that win. Yeah, a lot of people, especially if you have a lot of little bills, that one really makes you feel good when you take that card and be like, I'm not using this anymore. Speak to someone you trust, like family, friends, financial advisor for additional support. Anytime you all need any or have any questions, Alejandro and I both are happy to help. We love coming out and doing stuff like this. We have people that will come into the branch and see us. We'll sit and help them look at a budget. CCOA is another good one. Karen's got some flyers back there for it. And that's it. Okay.
You guys have any questions? Perfect.
Yes.
How many credit cards is a healthy amount?
I would say some of it's going to depend on the available credit on each card, but I think it's a good idea to at least have a couple because you want to have one that you can use to back up in case you need for an emergency. And then I would recommend using a credit card for your day-to-day use all the time because as long as you're paying it off every month, you can actually earn money on a lot of credit cards. Like Amazon card, it's like 3% back on all Amazon purchases. Well, I buy a ton of stuff on Amazon. What's that? 5% on travel, yeah. I mean, depending on, and that's the thing, look at what the card offers and find one that matches you. Make them pay you, or make us pay you money,
That's a big dependent too. Is what are you using it for, right? If you're using it for gas, maybe you have a gas card. Personally, we fly out and go, on vacations, and so my wife, we have a Southwest card that pays for our flights, things like that. So just, if there's something that you can, like Brandon said, get money back on and save yourself some money on that, then I would say, go for that.
And you want to keep as few as possible, but at least a couple, I would say, because you want to keep your credit active and going. I've ran into lots of situations with some of my older clientele based out at Crossover Branch where they've got everything paid off, and so I don't use credit. In today's world, to get a new cell phone, you pretty much have to have credit to do just about anything. So I've got, some great customers that have their retirement, they're not having to work anymore or anything, but they can't get a new cell phone without putting down a deposit or somebody helping them out. So it's just real important that you keep that credit active and make it work for you. Store cards, a lot of people are really against, like a Best Buy card or a Home Depot. You never want to pay interest on those cards because the interest is outrageous. But if they're offering no interest for 2 years and you need a new refrigerator, that's a free loan for 2 years. So you want to kind of look at those things too. And just make sure that you're also keeping your credit active, but monitoring it as well. Because fraud is such a huge thing. And if somebody hit, like my Best Buy card, and I didn't use it very often, I may not notice that something had happened unless I, had identity theft protection, something like that. So I always try and, on my emergency card, I have the limit lowered way down on it to where if somebody did get a hold of it or did get my account number, they couldn't do a lot. But then you can do that. Some credit cards, some companies, you can actually even do it on their app. So you can change and limit your credit limit that way. So.
What other questions you all got?
I know that each one's different, but like having something fully like a credit card where it does have a zero balance, sometimes you can get punished for
That's
that.
what we're running into.
versus
They
actually
close
having-
the accounts
they'll close
on
the
us.
account.
They'll close, yes. Actually, this summer I did kind of a little experiment for myself because I've always wondered, how much does it really affect? And I mean, granted, this was just my example, so everybody's credit's going to be a little different. But I wasn't paying attention, and my oldest card, I had it knocked down to a really low limit. Well, they closed it. It was my oldest line of credit. It was 19 years old, and it knocked my credit score down like 23 points in a month. Now, the next month, it went up a little bit again, so it wasn't too bad. But then I actually went and got an Amazon card because they were doing a special, gift card when you sign up. And then, like I said, 3% back on Amazon I felt like a great deal. So I got that, and it took 2 hits on my credit because I did mine and then my wife's as well. So it was 2 separate cards. That dropped my score about 6 points. But the next month, I thought it was neat because I got more credit line back. it actually upped my credit score. So credit's kind of an ever-evolving, ever-moving target. Month to month, I cannot do anything at all, and my credit will still move 3 or 4 points. So, but yeah, the hard part is when they close them and don't tell you. And a lot of times, you want to check with your individual companies, but a lot of times it's if you don't charge anything in a year or 2 years, that's when they'll close it out. And mine was 2 years. And then they
Shut it down. Synchrony's been killing us.
Yeah, and they are a lot of cards because they do, you know, all your I think Home Depot, Furniture Row, yeah, Lowe's, yeah, tons of different places.
And then I had a high amount of credit with Lowe's, and I didn't use it, so they took my credit down to $100. I'm like, what good does it do to even have the card?
A lot will do that. So, for like I was talking about, like I do it on mine on purpose, a lot of companies will just do that rather than close it. So it is better than them just closing out that line of credit without, you know, letting you know. But it's still, it can affect it because it's limiting the amount of available credit you have.
Because, you know, if you buy something like an appliance and you pay it off in that 2-year time frame, and then you don't use it again, like that's where we're having problems.
And they may be doing that to protect you, taking it down like that. If it's like Brendan said, if it's still open and you need to go buy another appliance, they're gonna raise it right back up.
Okay.
That's
Okay.
Unless you had a major hit or something on there.
Okay.
that my Best Buy did that to where it was, you know, I didn't use it for probably a year and a half or so, and then we decided I wanted a new TV because they were, you know, no interest for 24 months.
Yeah.
And I went to the store and didn't even realize my card had been dropped down to, I think it was like $100 or $200. It, like 2 seconds on the computer, they had it raised back up.
Okay.
So like Karen said, unless something major is changing your credit file, they're pretty good about being able to raise that back up for you. But overall, them closing the accounts, I wouldn't worry about it too much. It freaked me out because I was just mad because it was my longest card. Like I'd had it since I was just a brand new adult. And, you know, it did hurt my credit, but it recovered pretty quick. As long as you're not doing anything negative, you know, late payments, stuff like that, or over the limit, that's another big one that you don't want to do.
I came in late. It says here the debt repayment, so it shows you like avalanche method and snowball method. What's that in the short term?
We can go back to it.
Thank you.
I think she missed the very first part.
Sorry.
Yeah,
No, you're good. We have to go over it again.
So avalanche method is when you're going to take all your debt and take the highest interest rate card first, or the highest loan first. And you want to make sure all your minimum payments are met, but then after that, you want to put all available funds that you can, paying off that highest interest card. A lot of people like doing that because there's a benefit. You know, if you've got one card that's like 26%, that's killing you just making the minimum payment on that. So you want to take those and do it that way. Snowball method, I know a lot of people that have done this, especially if you've got a bunch of those little cards or little debt out there. That's where you're going to list it from smallest to largest, and just think of a snowball rolling down a hill. You're just going to keep collecting those cards and closing them out as you go. I was saying earlier, a lot of people really like that one because you can really feel like you've accomplished something when you know, if you've got a card that only has a couple $100 on it and you pay it off, you can cancel that card, you can put that card away, whatever you're going to do with it. And it's a good feeling of accomplishment. You can see it because you're not getting that bill every month anymore. So, and those are just 2 different methods, probably the 2 most common, I would say.
Yeah.
Thank you.
You're welcome.
And probably, honestly, the most important thing is knowing how much debt you have. A lot of people kind of put their head in the sand and don't realize they may have $30,000 or $40,000 worth of debt outside of their car and their home and not even really know. Getting it on paper, I think, is a good way to address it.
And when you're putting it on paper, write your interest rate next to it. Because that's mind-blowing when you start looking at some of the interest you'll pay on those. I mean, you can make a minimum payment, which now all credit cards, when you get your bill, and it says if you were to make the minimum payment, this is how long it would take to pay off, versus if you paid extra each time. Has anybody ever looked at what it would take to just pay off like a $1,000 credit card?
Yeah.
Doing the
Yeah.
minimum payment?
It's
Forever?
like 10 years.
Yes, like 10 or 12 years, just to pay it off.
A lot more interest than you did on the initial purchase, probably.
And that's another thing people don't think about with credit is you want to use it and you want to take advantage of it where you can, but you don't want it to hurt you. You know, I know people that have put a PlayStation on a credit card. When I had a friend, you know, when I was in college, got the first credit card, friend went and put a PlayStation on it. Well, that's great, but then he was paying interest on it. At the end, he wound up paying like $700 for something that should have been $3.
You could have bought 3 of
Yeah,
them.
he could have bought 3 of them, an Xbox too. So stuff like that is, like Karen said, if you write it all down and look at it, that's really when you can start seeing where you can save, how you can save, and where you're losing the most.
Yeah, we were doing a lot of Klarna purchases, and then one day we sat out on a Saturday and wrote everything down, and it's like 40%. And I was like, what are we doing? We can't do this anymore. It was for like an Airbnb. We ended up paying a whole lot of money, a whole lot.
And subscriptions are another thing nowadays that, because everything's a subscription. If you can, sit down, go over your monthly credit card bill or however you're paying it out of your account and list all those out and decide, you know, do I really need all of this? You know, one thing that I do is we rotate our cable stuff. We got rid of cable because it was expensive and started doing streaming services. Well, when we got to looking a few months later, it's like, okay, now we're paying more for these than we were cable. So we rotate. Every 3 months, I get rid of Netflix and get Hulu. I get rid of Amazon Prime and get Disney. So I just rotate it out. And plus, then I don't have to just have it sitting there when there's no new shows to watch. I'll get it for 3 months, binge on everything I want from that one, and then close it out. And you can do that. I mean, some of them, I think Hulu's one where you can just, I mean, there's a little button you click and it just shuts it off for that month. And you can go back in and turn it on anytime you want. So, little things like that. You don't think you're saving a lot, but you really are when you put it down on paper. Every little thing you do helps.
And same thing with like reducing cost. And so I was in the same boat of paying for streaming services, and my phone bill kept going up on one of the carriers that I was on, and so I was looking at a different one, and they offered basically the same price, but then I was getting certain streaming services on there for the same, you know, getting the same price there. So when we talk about budgeting, looking at things like that and looking at ways to reduce that number. And so I was able to get a few streaming services almost half off. And I have 2 kiddos, and so it came with ads. And so for me, I was like, I don't care, I'm interrupted half the time anyway. So, so having the ads wasn't a problem. But just looking at other ways to, you know, reduce those costs and get those costs down was an option, going through certain cell carriers and things like that.
And read the details.
Yes.
And shop around for everything. My wife makes fun of me sometimes because I will shop for stuff for months, but I always get a good deal on what I'm getting because I want to make sure that I'm finding the best deal possible. And look at old deals that are expired, because a lot of companies will rotate those deals back and forth, you know, year round, and it never hurts to just ask. You know, when I did have cable, I would call every year and they would knock it down a little bit, because they do it for new customers all the time. And you know, if you're leaving, a lot of times they will. They got to where towards the end they weren't doing enough because I thought I could get it cheaper through streaming. So, you know, they may say no, but that's the worst they do, is say no. And that's with insurance, everything. Insurance is a big one that people will go to one guy, he'll tell you what you're paying, and okay, well, it's insurance, I've got to have it. And you do have to have it, but there's lots of ways that you can save on it. Even just shopping around internet insurance, like Geico, stuff like that, where you don't actually have an insurance agent anymore, you can usually get quite a bit cheaper through that. And sadly, I actually found with my insurance company, Travelers, I got better service when I didn't have an agent. Because that agent was trying to help all of his local customers. I can just call into the call center, they give me the first available agent, he'd do the same thing and do it online, so.
My mother passed away in December, and we realized at that point that we're really late to the life insurance party. And being 56 and 57, now we're having to figure out what's better, because term life ends at 80, and my family lives. They live, like my mother just lived, you know. And so now we're, like right now, I'm paying like $65 for 15,000.
Wow, yeah.
And I'm wondering, like, I noticed in these calculations, like Marta does not have life insurance. And so I'm just like, I don't know what we can do to start shopping for that at this point. Because now I'm like, oh my gosh, it was so necessary for my mother to have had it, and she just didn't.
With the life insurance, what is your need for life
That-
insurance? Is it to pay off your home so your kids don't have to have that debt?
Right.
Because they can also sell that home. So, you think about that, you may be paying for insurance you don't need.
Yeah. I'm thinking that,
Long-term
like, I
care
didn't know
probably is
anything.
better than life insurance in
Yeah.
some cases.
Yeah, I just didn't, I never paid attention to what is term, what is whole, I had no idea, and now I'm like, okay, now we'll have these small whole policies, because if we are 90, we're not gonna, it's just burial,
Right.
But I'm like, well, maybe we need to have some term too. And then I've got an extra accident, and that just starts adding up financially and just really,
And I think, like Karen said, what the purpose of it is really kind of determines if we get things like that because everybody says, you need this, you need this, you need this. My grandmother didn't have life insurance. She had a CD that she had opened years ago that had enough to cover her burial, her tombstone, and everything else. And she told my mom, she said, you're an only child, your insurance is my house. Yeah, my house is paid for, it's gonna go to you, it will more than cover anything else, and we didn't even know about the CD until she passed away.
Wow.
But stuff like that, insurance isn't just from a company. You can create your own insurance with, putting money in a savings account, in a CD that you're not touching. That's,
It's kind of a gambling effect though, because you start doing the math, you're like, even if I put 200 in the,
I know,
Yeah.
starting at this,
if I make it 60,
we're
then
so
there's only,
old now,
10,000.
yeah. Yeah,
Well, and it also depends on what kind of retirement you have saved up too, or you just.
Girl,
Social
what's
Security.
retirement?
Yeah, exactly.
Like
And a lot of
we-
people don't have that, because
No.
we don't have that option. I will say, and this is coming from having parents that went through long-term issues and stuff, the long-term care became more important than life insurance.
Yeah,
So think about that, because I always think about, well, life insurance, it's not gonna do me any good when I'm gone. But what will it do for my kids?
yeah,
Well, my stuff's all being put into a trust, and my daughter's, she's in wealth management, she's telling me what to do with it. But yeah, I do have life insurance, but it's not the biggest thing. That long-term health care, in case I have dementia or
Yeah.
stroke or something like that, that can become more of a priority.
okay, okay.
That's the way I look at it anyway, having been through it.
we actually have associates at the bank that offer life insurance themselves.
Okay.
So, and they can sit down with you and kind of look and see what might be the best. And it is, everybody's gonna be a little different. And just because you get one today doesn't mean that it's the same one you need in 10 years. It's all about, the debt that you have and what you want to do for your family. But I agree with Karen that the long term, I see more people struggling when their parents are in a nursing home or in a facility where, they need round-the-clock care, struggling to pay that more so than after someone's passed away and needing to get all that. Because usually out of an estate, even small estates are gonna have enough to settle most everything, especially as you get older and you've paid stuff down your whole life, so.
You can always sell that property, that would be the biggest thing.
Okay, okay.
The other thing I would ask you guys, because you guys are kind of close to my age and stuff, I'm 64. If you have not gone on the government website, you can go out and see how much your Social Security. There is a thing, you can go in and create your own secure, and you can see what you would be paid out at 62, 63, 65, 67. Unfortunately, our age group is 67. You can get even more at 70, but who wants to work that long? There are some that do.
Yeah,
But my goal was to retire at 65, but I'm not gonna collect my Social Security until I'm 67. So that was my goal with my retirement. So everybody has a little different path, but it's good just to sit down, and if you don't know, I'm sure there's a website or a professional out there that can talk you through it.
Yeah, and there's gonna be, every different person's gonna have a little different idea of what's best for you. Ultimately, it's you that should decide what you think's best, with guidance from those of us that can help.
Okay, another thing, I'm just taking up the whole class,
No,
sorry.
I love, questions are fun. This is the fun part for me.
Okay, so I'm just telling on myself today. Another problem I have is we have a real good, strong budget, like we're doing the 50, 30, 20. But what I find in my wants is that if I don't make something non-negotiable, like Marta had 40, she loved her Starbucks, you know? I find that if I take everything down to like bare bones like that on my wants, I'll go and start overspending on credit cards and just really get myself in big trouble because I feel deprived. I'm like,
Yeah.
this
Oh,
is
yeah.
not fair, and my life is not fair, and I'm working 2 jobs, and I'm still making this, and you know, and then I just go, I'm just gonna, you know, spend to try to make myself feel better. And so, do you have some kind of advice for like a wild woman like me?
I do. I'm a reforming wild woman myself. I have made myself start putting everything I spend into a household, a clothing, a restaurant. I'm making myself keep up with everyone because it's a pain to do that, but when you do, you realize how much you've spent in a week, in 2 weeks, a month. And when you start tracking it that way down to that, okay, I spent this much on Amazon for household needs, but then here's my other, and I spread that out, and when I start looking at that, it's a wake-up call. So like I said, it's about putting it out there and making yourself aware, and we don't think about that when we've got credit cards. So I now make myself itemize all of that.
I have a question about that. Where do you recommend that we organize this? So what programs do you like to use? Because, you know, when you have 47 subscriptions and you have 4 credit cards and a house payment and 3 banks, and what's your recommendation for tracking that's affordable and safe?
Honestly, whatever works best for you. For me, I just use like a Google Sheet and do my expenses every month. A lot of credit card companies have budgeting tools. Arvest.com, you can go there, and there's some really good ones on there. If you're talking like actual programs like a QuickBooks type thing, some people will pay for, I'm cheap when it comes to stuff like that, so good old Google Sheet works great for me. And you can go online and find different
Excel,
formulas.
just switched it over to Google Sheets.
Okay,
Just
that's what I
basic
do,
stuff.
but
And
it's
this
so
booklet
manual.
has got kind of a grid in there for you to do it, and I have one for each year. You know, my goal for this year is to pay off this, you know, my goal for this year, and I have by my weekly pay, or my bi-weekly paycheck, what I'm gonna spend, you know, what are my bills that I have to pay, what do I have extra that I can put here, and I have that. And then I just recently added a sheet for tracking every one of those expenses, because when I started doing that, I'm like, no wonder I'm getting such large credit card bills at the end of the month. I'm spending like crazy, so.
right.
I think to Karen's point is as you're inputting all that yourself, you're kind of realizing what you're spending, how much you've spent versus it just gathering all the information up and putting it there for you.
So you'll have a $1,200 bill at the end of the month, and you're like, what the heck was that? And you think it's a couple of big bills, and there might be a big one in there, because sometimes, you know, I'll pay my utilities through one of my credit cards. Well, you know, that gives me mileage for when I have to go see my granddaughter in Colorado. But by the same token, there are times when it's not, it's a lot of little things, and they add up, and we just don't think about it. We think, oh, it's $10 here or 20 here.
The
No,
little
they
things
add
are
up
what kill you.
quickly.
I mean, I recently, I used to drink like 2 or 3 energy drinks every day. And of my last vacation, I didn't. And I'm like, man, I've got some extra money. I mean, I was spending like $180 a month on energy drinks. That's insane. But I was doing it because I didn't, you know, I didn't think anything about $3 in the morning and $3 in the afternoon.
Like you said, a lot of people do Starbucks now, it's 7 brew apparently. But yeah, I don't buy coffee. I do it at home. I do mine at home. One of the things that I was spending, I like to have a glass of wine with dinner, and I was going out to eat, or I was eating out during the week. Once I started eating lunch at the bank, or not going out, or if I went out, not having a glass of alcohol. Of course, anymore, a glass of tea is almost as expensive as a glass of wine, if you'll notice that. But you think about that, you know, order water with your meals. So there are just little things like that. You can still have those luxuries, but do it in a pared down version.
And when you feel like you're just not getting anything, like you were saying, I get that. And there's nothing wrong with having a little savings account with money to just blow.
Okay.
And
I would say
because it
almost-
gives you that kind of rush of, oh, I got to spend money, I got to go shopping.
And I would say almost follow that kind of short-term goal, right? Set a short-term goal of something that you want to buy to feel that accomplishment after budgeting is, okay, once I hit this point
Like the
within 6
reward.
months, yes, get yourself something at that point. But at that point, you've already budgeted for it, right? It's in your plans, it's in your goals, so you can go ahead and you can purchase that without feeling guilty of overspending or spending too much
Okay.
type thing.
Yeah, it's just as important to budget for the fun stuff. Because if not, then you end up, well, I haven't treated myself in forever, so, and then just
Then it's too much.
over-treating
No,
yourself.
yeah. And Christmas is when it's really bad for me, because we'll do like a budget, and then I'll just like, oh, I don't have enough in there, so I'll spend over here on credit cards, because it doesn't feel like I'm spending. And then we get to the end of January, and I'm like,
It's
So-
that end of the month payment that you don't think about until the end of the month. I pay my credit card every other day. So that way, it's just like it's coming out of my checking account. My checking account hardly ever has anything in it because it all goes into different savings or retirement. And then no matter if I've made $20 payments, I've made $4,000 payments, but I don't stop. I just keep doing that. That way, you do feel it more immediate than a lot of people will wait for that end of the month statement. And it's like, wow, what am I going to do? So that's another thing that I've done that has really helped. Because it's just, it's stopping you from being able to do that because you can look at your account and be like, oh yeah, no, I don't have the money to get that today.
this
Well,
is
I
all
think
just
it's-
very overwhelming, though. It just sounds very overwhelming.
Yeah, but when you put it on paper, it becomes manageable.
And so depending,
When you put it on paper, yeah, it looks overwhelming at once, but then when you can start addressing it, you realize it's manageable. And it's also changing your mindset on some of this stuff. It's like, oh man, I just found this shirt on sale for $20 off, but you never wear that shirt. That's still an expense. You're not saving, you're spending. It's still going out the door.
and depending on the credit cards you have, you can also get like those authorized cards. So I have one personally that me and my wife, we split up, and we just have a $100 limit on it for gas and whatever it is that we want. And so you could even do something like that. I've done that in the past where I have this separate credit card, it's gonna decline after $100. That is my budget, that is my wants for, the month, or however long you wanna set that time frame. But it kinda helps you also limit yourself on that aspect. So I leave all my main cards at home, I have the one with the limit on it. If I'm out and about, I'm not gonna be able to just spend it, right? I'm gonna be limited, I'm gonna have to watch what I'm spending there.
And just like we do with our kids, set yourself an allowance and keep it in cash. Because people are less likely to spend that, and then when it's gone, it's gone.
You
don't have to-
question it more when you have
Uh-huh.
cash.
Yeah.
When you have cash.
Do I really need
Yeah,
that?
but that's my problem. I have this cash, and I have this cash in this envelope, and I'm like, there's not enough in there, but if I put it on this credit card,
No,
Well, you
no,
know,
you don't have the credit card, you just have your
Just
envelope.
don't take it.
So you
Yeah,
used
I'm
to
the
tell you to put
opposite.
your credit cards in the freezer or something like that.
now
so you
they
didn't
have
spend them,
Apple
but your
Wallet,
credit
I've
cards
got them all on my
attached to
phone, so I'm
everything
like,
else.
yeah, this'll be fine, and then I just get in so much trouble with it, like,
I do think you tracking everything you're spending, I think that would help you
I think
tremendously.
you're
It helped
right,
me
yeah.
a lot.
yeah.
That's
And
where
I'm
you
not
really see
perfect
what
at
you
it,
do.
I'm still mad woman with the money, but I'm trying to retire, I have a goal of when I wanna retire, so this next 2-3 years are gonna be very tight, and I'm like, Karen, you gotta be patient.
Do you have any basic guidelines about teenagers and like starting them on a credit card, putting them on yours or whatever?
You can put them on your credit card, they won't start earning credit until they're 18. I think it's really important to get as young as possible, get them a checking account, not just a savings account, but a checking account. And like my daughter, she's 14 now. I got her first account when she was probably about 8. And she didn't get much, but you know, it's just like, okay, you pick up your laundry and you get $5 a week. And you'll then pay her for grades and stuff. But just that $5 a week would take a while to save up enough to get stuff. And it didn't take very long for her to realize, oh, no, I have to do something to get this reward. And it's not unlimited. And it was really neat watching because she went from, we go to the store and I want this, I want this, I want this, to, you know, the first thing she really saved for was a Nintendo Switch. And she saved up like $180 to get it in a game. And it took her a while, but it was almost like saving became a game for her, where it was like her goal was, I'm gonna save, I'm gonna save. And she would look for new things to do, ways to save, birthday, Christmas, she would just, oh, I just put that in my account. So I think, to me, the younger the better, and get them a debit card. That's why I say get a checking account for them, because everybody, that's what everybody pays with now, for the most part, you know, for day-to-day stuff.
Cash out these days. I go to a lot of games and have work concession stands, and my boss is like, oh, you know, the cash. I'm like, kids don't handle cash, don't even have a card. Most of the time they're using Cash App or Venmo or something like that. And that's the way the parents are managing their money. I will say, we have what we call a family credit card, and I know others do that as well, where you're basically the owner of the credit card, but you can put, say, $500 out there for when they go buy books at college, but you can take that right back down to 200 or 100, so they're not overspending. So you can control those limits on the cards, but they're not getting credit necessarily for that because it's still your card. Eventually, they need to get their own card. But there are ways of managing that money, and like you said, teaching them to manage that, I think is a great way to do it, especially at that age.
Even being that young, even at 14, you know, one big thing that Piper's looking at right now is she's almost at driving age. So as we've started going out and driving, I'll tell her, I'm like, okay, we went to Tulsa. Do you know how much that cost us in gas? Do you know how to just making them as aware as possible of what it's like to be an adult? Because sad reality is working in a bank, I don't see very many kids, very many parents that are doing that to the extent that you need to be. And then kids getting that first credit card and getting in a lot of trouble with it, or ruining their credit by the time they're, you know, my wife did that. She had a family that they took care of everything. She moved up here to go to school, and that was back when, you know, you walked out and there were 15 different credit card companies just giving away stuff and giving kids credit cards. She got a bunch of credit cards. I don't think she realized she had to pay them back for a while.
Realize it's a loan.
Yeah, yeah. And that's, so the earlier they can see that and recognize that, I think it's super important to get them started early.
And I would say do the checking account, because I've done loans for people in the past who have added their kids to their cards, but then it looks like that kid is also, you know, they're now liable for that debt as well. So when it comes to their debt to income and those ratios, it can affect those as well. So doing the checking account, that's not reporting to credit bureaus and not really affecting them as much in that area as well. Or like Karen said, that family card, because that doesn't report either, and you can kind of set limits on that for them, that sort of thing as well.
And I'll say, talking about credit, the better you are at getting your credit score up higher, the more rewards you're gonna get from companies, the lower interest rates you're gonna get. One of the easiest ways to save money is to work on your credit, because interest rates can vary wildly depending on whether or not you're buying from a new car dealership, even a used car at a new car dealership, versus a buy here, pay here lot. I've seen people with 25, 35% interest on a car, which yeah, it's a lot.
Do you think it's a smart idea to refinance after you've made your purchase? Like, we had to get a car last year because he totaled his work vehicle and he couldn't work, you know, get out of vehicle. And we tried, we didn't want to finance. We just didn't want to, but we could not find a good vehicle. So, and it was right before Christmas and we were just ready to get back to regular activities. And so we took a real hit with the 13% interest. And now companies are coming forward, like banks and credit union, they're like, refinance, you should refinance, we'll get you 8%. And I'm like, is it a good idea?
I think so.
Okay.
I've refinanced a car, I've refinanced my home.
Okay.
It all depends on your interest rate.
Depends
And
on
really,
how high it is on your loan.
And how much you
how
owe.
low it is right now. there's a factor in there, but just sit down and talk to a professional. They can run the numbers for you and let you decide.
And with a mortgage, it's usually about 1%. It's gonna save you a ton. With an auto loan, probably 2 or 3 before it really starts to, but I mean, just use a loan calculator and you can figure out the difference in interest. And savings as well too. When you look at, some people just keep money in a savings at 1%. You could throw it in a CD and earn 3 times that. So it's just kind of really educating yourself and being as aware as possible and asking questions, because we're always willing to help, and I mean, it's what we enjoy doing. I love helping people with budgets and kind of showing them, different tips and tricks. So I think that's a big part, is the more you keep up with it, the better you're gonna be. But with interest rates, I definitely would refinance.
So what's your opinion on high yield savings accounts like SoFi, Ally? Like, I'm saving some money in a credit union right now, I'm getting like 1.01. I mean, it's so small. But then when I put money over into SoFi, we're getting like 3.4%. And I just wonder, what is your opinion? I don't know anything about a CD. I've never done that. What's the appeal?
With a CD, the nice thing, you're usually gonna have a higher rate that you're gonna get paid. For instance, right now we're at about 1.5% on a savings account, money market type thing. Or a CD, we can get a little over 3%. With a CD, you have to think about how long you're gonna lock that money down for, because it is locked in and you will take a penalty if you have to pull it out. And depending on how much you've got in there and how early you pull it out, it could actually eat into the principal balance on it. But a lot of people will do, like I have staggered CDs. So I have a CD that comes due every 6 months. And then I kind of reevaluate at that time. Do I want to add more to it? Do I not? Do I want to take some out? But then also I recommend keeping enough in your savings or money market account that's easily accessible every day. Keeping enough to live, like a month's worth of expenses on that. Because if you do that, then you don't have to worry about getting into the CD as much. And really just kind of, ask your bankers what specials they've got and what time frame they think looks the best right now.
Ask them if they have high yield, because local banks do have high yield savings. Now you have to have a larger amount, but it's worth asking.
Okay.
Because in bank products, your local banks, you're dealing with local people. It's just like when you're doing a car loan with a local bank.
Yeah.
If you get held in it, you can go in and they can sign off on it versus having to send it off somewhere else. Think about that local service, but, they also have a lot of products that you probably don't even know about. So much has changed in banking, especially in the last 30 years. There are so many products out there that people don't know about because they've had the same account for the last 30 or 40 years.
And a lot of the online banks, a lot of them are great, but they'll tie up your money a little longer because it's not easily accessible, like in the sense of just being able to walk in and withdraw it out. But if they've got a higher rate, think about how much you need day to day for like a month or two and keep that locally and the rest somewhere else. It's nothing wrong with having 2 or 3 different banks. Make the system work for you.
Okay.
And I would always encourage people, of course, this is the compliance side of me. I do marketing, but compliance is a big part of my job. Read the details. I tell people this all the time. If you're doing a streaming service, or if you're signing up for a satellite, oh, well, it's this. Well, the satellite companies and cable used to compete with each other, and then you looked at the details, you actually were paying more on the one you thought was cheaper. So you have to look at the whole picture and read those details and make sure you don't get yourself locked into something that you're going to be stuck with for
Like
a while.
Planet Fitness membership. We got locked in to Planet Fitness because I just didn't
Read it.
want to.
They're actually one of the easier ones to work with. They're actually one of the easiest to work with. Yeah, I've been in other fitness things and yeah, you're really locked in and you don't get your money's worth.
Anybody got anything else? No?
Are there other series? I'm just curious. We offer a lot of different things. Next month, we're going to be talking about fraud. We've talked about doing home ownership or home buying 101. Are there things that you guys would like to see more of or more in depth?
I'd like to be more financially literate, like things like money market. I don't know what that is, CD.
So
I don't know
basically
what those
banking
things
101.
are.
Yeah, okay, that's good to know.
I'd love to be able to play with my money more, but I don't know how to do it, you know?
And I'll say, when you start doing that, it's almost like the using your reward money to go shopping. I move my money around and play with it.
Yeah.
You know, put some in a savings over here, or, you know, do more in my retirement. And a lot of times, you get to a point where you're like, you don't want to spend it because it's more fun to have it. But then, you know, so kind of reward yourself in that way. I used to go play cards a lot. And I started just, you know, if I'm gonna gamble, I'll do it in the stock market. So instead of taking the money to the casino, if I decide I want to do that, I'll put it in my Robinhood account and invest it in something. Still the same thing in a way, you're still kind of gambling on what the stock's gonna do. Some do well, some don't. But at least that way, you've got a fair chance of increasing your
Yeah.
funds.
Another thing that I would advise you to think about, a lot of people don't understand the workings of it and stuff, but if you have a big need, like with your home or something, a lot of people think, oh, well, I need to go get a credit card with this store, or I need to get this or that. Your home may have equity, and if you own your own home, it may have equity. You can open what we call, you can do a home equity loan or a home equity that would just pay for the improvement of the home improvement, but then there's a home equity line of credit, and you can keep that line of credit out there for you as an emergency use. So it's good to keep it paid down, but you can keep that open for a while. You just don't need to max it out and keep it out there. But, you know, it's another thing that people don't think about, that equity in their home can be used. And the way the prices of homes have gone up, people's home equity has gone up.
People have a ton of equity in their home right now.
And taxes.
Yes.
Yeah, and taxes, you're exactly right.
Taxes and insurance went up a lot this past year.
Taxes.
I think the financial literacy is really a valuable one for all of us, is just because there's so many options out there. If you
Yeah.
don't know what an IRA self-directed is.
Yeah, I don't
versus,
know,
you
what
know,
is Roth? I don't know
Roth,
what that
what's
is.
Roth,
I
yeah.
don't know what these things
Yeah.
are.
529 plan.
And
Yeah.
we're self-employed, you know,
So
and
it's
that
not like we have a
throws
employer
another, monkey wrench in there
It
for
does,
us.
yeah.
So,
who's looking out for us in the future.
yeah, we have
Yes.
to do it for ourselves.
Yeah, your insurance, your everything. I was self-employed before I started with the bank, and yeah. What's your question?
Yeah, I'll just say, in reference to her question of like what would be helpful, well, one, everything. But two, I already sort of said this, but I could really use help with actually tools for managing this stuff. Because there's so much information that it is overwhelming, and I don't know how to manage it or how to store it. So that would be super helpful. I'm really interested.
CCOA.
What's that?
There's a CCOA, it's over by Lowe's on Zion. They do a lot of help with like a lot of that stuff.
Setting it
like
up.
But then
updating
I'm so
those
cheap,
things.
like, well, until I figure out my budget, can I even afford to pay a financial officer?
I think they're not.
Well, it depends on what you're doing with CCOA. Some of their stuff is free.
Okay.
It's very low income. I've got a thing back there. I'm on their marketing committee, so I do a lot with them. They have different things. Most of the people they work with are low to moderate income. They
Okay,
have some people that make a lot of money,
yeah,
but they don't know how to manage that money.
yeah.
So it's not just being poor that people don't know how to manage money. Sometimes they have a lot of money coming in, but they're spending a lot more going out, so.
Like, even as simple as you guys talked about your Google Sheet, I wouldn't want to ask you to put up your Google Sheet, but even just showing me, like,
Yeah.
what are your columns?
Yeah.
And how, what are your tabs, and how are you
Hey, we're
paying your credit card every other day, or, those very simple tools that no one teaches us unless you went to business school.
And teach you a lot in there, really.
Yeah.
And that is something, because yeah, the schools don't really teach much
Yeah.
on
They don't
finance
teach
anymore.
anything. I used to substitute, and I went in and substituted for a financial literacy class, which were for the at-risk kids. These classes were money management classes for at-risk kids. And I'm like, what about like these, I hate to say the more like the
Affluent, yeah.
Yeah, the AP
the
classes.
AP kids don't know how to manage money. Y'all got these kids down here and they're
And,
gonna do a good job. And then you got your AP kids
that have no
that
idea
No
are
clue.
projected to
No
earn
clue.
more
what anything costs.
statistically.
Right.
And then they're just gonna, student loan debt, which is a big thing for us, that we got in so much trouble with student loan debt. Because in 1996, they were just like, no, here, you need a computer, go get a computer. No, you can't get a job with your grad school, God, you don't need a job here, here's
The
some
interest
work.
rates were a lot lower back then
And,
too.
talking about having to read all of the fine print, we didn't have time to read fine print, we had to, we had to study. So it was just like, no, I gotta get some money now, and we had a baby at that time. And so we got into so much trouble with student loan debt that we're still having to climb out of it, We've not ever been able to buy a house because there's been so much student loan debt. The banks won't even look at us.
That's the student loan
And
debt.
so then it's gotten with,
Has to be
well,
calculated.
why should I care about my credit? Because it's ruined anyway with all this student loan debt, so I might as
You're
well
not
take
alone.
these
There's
cards
a
and
lot
just,
of people out there with student loan
oh
debt.
my gosh, it's overwhelming. It's just been, it's to the point where we're like, we wish we had never gotten the degrees. Because financial management didn't come along with that, and it wasn't something that we were taught. And half these things you talk about, I don't know what those things are. Like, I substituted financial management, and these kids were passing tests I was giving, and I had no idea what those things were. And so I understand where you're coming from, brown sweater, because right now with budgeting, we just do pen and paper. We have notebooks full of just budgets, because you give me a spreadsheet, my head falls off,
And that is a good point, though. If you don't like that, if you're not into the spreadsheets and everything, you want to keep it as simple as you can to where you'll actually use it. Because I've seen people that have put together like with pivot points and like all, and I'm like, how, do you use that? No, I made it, it's really neat, but you don't use it. Well, it's really hard and confusing.
And I look at mine like weekly, sometimes I like, and the other good thing, once you get it on paper, if you're going back and looking at it, it makes you, those endorphins about spending money, you can get the
The
same
same
endorphins
feeling.
like, hey, I paid this off, or I've done this, or I'm on track, I'm staying on track. Because you need to have confidence in yourself, you need to feel good about what you're doing.
I have another, this is very off topic, but again, going back to what I would like, environment is super important to me, and I find that there's a real loophole in the financial world of how do we invest and not just give Jeff Bezos money? How can we actually give money back to the planet or be environmentally sound? And so that would be super interesting to me if there was investing in social and environmental causes, and I think Fayetteville would show up for that, in general. So.
We don't usually get into the investment side of things, because that's a whole
Yeah.
other division, but we have people that can talk to you about that.
Okay.
They can talk to you about the environmental, that when you're talking about that, you're talking about a lot of money.
Yeah.
You might just want to give to a local nonprofit too. Because there's local nonprofits that do that, like Northwest Arkansas Land Trust.
Right.
They're
right.
keeping our canopy intact and
Yeah.
stuff, so.
Yeah.
I work with a lot of nonprofits, that's
I
the
do
reason why I
too.
say
I'm
that.
very involved in the nonprofit scene, but I'm more talking about like if we were to do stock market stuff, like what are the investments that are.
Where you're not just investing in
that
Amazon
you're
and
not just
Walmart.
giving billionaires money, that you're actually,
That conscious spending.
yes.
Well, it's kind of like Bombas and, what's the other one, Tom's, where they would give a pair of socks to
Right.
a person and stuff.
Right.
There are organizations like that. I think REI is one like that. So
Oh, yeah.
there are
Patagonia,
a lot of.
there's a lot of them, but if there's a way that you can, spend or save or like, whatever.
I think, like EVs, electric cars, all the different companies. The one hard part with that is a lot of times those are a little bit more risky
Yeah.
because you either get like a Tesla where it blows up and you're making a lot of money, or you get like a Lucid, which
Yeah.
I really liked their cars and used some of my gambling money to gamble on them a few years ago, and it did not work out.
Yeah.
Just because they didn't they're still around, but they didn't really make it.
That goes to their funding,
Mm-hmm.
whether or not they're gonna be viable, like Rivian's stock is like low, even though they're great.
Mm-hmm.
They're just not doing well because they don't have the big name.
Yeah, they don't market the way Tesla did.
That's where like, look, getting the information out there would be beneficial.
Well, and that's where stockbrokers come in investments and stuff. The other thing, they may be great at marketing and all this other stuff, but can they manage money?
Right.
Right, are they gonna be in business in 5 years? So you have to think about that.
Yeah.
And it is a gamble when you're dealing with people, The Big Short, you can go back and watch that movie, and it's about the 2007, 2008 crisis. And it talks about people investing in mortgages and stuff. When you really get into that, they were gambling big time.
Sure.
And I would tell people, I wouldn't gamble my money, I worked too hard for it. But there were people that would have, 7 or 8 home loans when they were funding it. And then they were renting them out, and then all of a sudden, when the interest rate changed, they couldn't afford that home anymore, and the rent wasn't covering it. So Big Short's a good lesson on investments. It gives it to you probably, as a matter of fact, as any that you've seen, but it tells people what actually happened.
That's a
Which is
movie?
pretty scary.
It's
Big
actually, it's a
Short.
really good movie, but it's also very, very accurate.
It was probably the most down-to-earth version of that, because when you start talking all that stuff, my mind just starts spinning, It gives you an example of, here's what really happened, So watch that, it tells you, because investing's a little scary.
And it's based on a true, like,
It is
a
absolutely.
person
And there were
that came
people
up
that
with
knew
it
it was
and
coming.
warned everybody
People knew it was
before,
coming.
and nobody
People
listened.
got greedy.
We're not in a rush to get out of the room. We can definitely talk a little more. I'm just going to wrap up our live stream for the folks online. So thank you for those of us who joined us online. If you'd like, we have program evaluations on our website as well, so you can do one there. And if you'd like to stay and talk a little longer, we do have the room. So thank you very much and have a great day.
Thank you.